So you are welcome once again to the third day of our 30 days bootcamp training. That is, we are learning how to trade Forex. We are learning from the beginner lesson to the intermediate lesson to the advanced level. Okay, so I want everyone to be consistent, just like we have been doing. So I'll kickstart. If you just joined us, if today is your first time, I would encourage you to watch the first day's video, which was about the anatomy of the candlesticks. Now, when you see a candlestick, you should be able to identify the various parts of the candlesticks and what it means. You should be able to identify that and then interpret that or understand what it means. Then yesterday, which was the second day, we learned about candlesticks pattern. We realized that, or we learned that there are different shapes on the candle. There are different shapes of the candlestick, and each of these shapes has its own psychology behind its formation. So I would share my screen right away, and then I'll take you through a quick recap of what we did. What we did yesterday, a quick recap of what we did yesterday, and then we can commence with today's lesson. All right, so yesterday we learned about candlesticks pattern, okay, which we have summarized it in a video I shared on the platform. So we realized that there are different types of candlesticks, and then their names. The names are not really important, but you being able to identify each candlesticks and then the psychology behind its formation, okay, that is what is most important. But it's also good when you know the names, and then can identify each candlestick by its name or each candlestick pattern by its name. Now, when we talk about candlestick is just a representation of price movement, the movement of price. Okay, yes. So as I take you through the recap, we realize that there are different sizes of candle. We have long candlestick, we have short, we have bullish. This is the bullish long candlestick, and this is the short version of it. And we realize we have the bearish, and then the bearish too, we have different shape. We have the long one, we have the short one, and then we learned that this is another different candlestick formation. What does this mean? We shared all these ideas in the lesson yesterday. Okay, so we have the engulfing bar candlestick, we have the bullish engulfing bar, and then we also learned about the doji candlestick. Okay, the doji candlestick and its characteristics. We learned about dragonfly doji, which looks like this. All this has meaning. And then we have the gravestone doji, which is the bearish form of the dragonfly. This is the bullish form, or the bullish this is the bullish candle. Okay, yes, I interpreted or I explained all this in last night's video. All right, so I'll quickly skip all this and then move straight to what we have today. So today we are going to learn about the market structure. Please, if you have any question concerning what we are learning, or alongside, if you get any question that you need answers to, kindly note them down. I'll give time for questions and then answers. Then we can answer all those questions. All right, so today's lesson is about the market structure. When we talk about the market structure, what does it mean? Okay, so I'll quickly switch off and take you straight to a page where I'll show you the markets. Okay, so this is, let me do it well for you to see. This is the price chart for GBP JPY. When I say GBP JPY, I mean British pound, and then Japanese yen. Okay, so these are two currencies, comparing two currencies. And then the chart you are seeing here is the movement of price within a certain time frame. Okay, the movement of price of these two currencies within a certain time frame. So the time frame I have selected here is the 4-hour time frame. Okay, so every candlestick you are seeing here, each candlestick you see here represents 4 hours. Each candlestick represents 4 hours. Let me zoom in so you can see. Each candlestick you see here represents what? 4 hours. Okay, so this is the price chart, like I said, for GBP, JPY, Great British Pounds, and then Japanese yen. We'll come to learn about currency pairs, okay, which will be a different lesson. So don't worry about the currencies I am mentioning. I just want to show you the market structure. So when you open your chart, okay, and then you scroll, this is the structure of the market. This is the structure of the market within a certain time frame. Let me switch to the daily time frame. So this is the daily time frame of this market. Okay, and then how the candlesticks has been formed here is called the market structure. How the candlestick has formed here is called the market structure. Okay, so basically you being able to open the chart and then identify the structure of the market is one of the greatest skill you ever need. Okay, now when you open the chart like this, if you don't know what is happening in the market, you'll not be able to make any meaningful thoughts out of the market. Therefore, there is a need for us to be able to identify the structure of the market. Okay, and that will give us information as to when to, the decisions that we can make in the market, whether to buy, to sell, or not to trade at all. Okay, so that is what we are going to learn today. So the first thing we want to talk about are the three types of what market structure. The market has three different structures. So the moment you open your chart, you should be able to identify the market structure. Now the first one is the uptrend market. Uptrend market. We shall talk about what uptrend market means. Then the next one we have downtrend market. So uptrend market, downtrend market, and then the last one is the ranging market. So you can take note of these three different market structures. Kindly take note of that. If possible, you can make some notes as we go ahead. So I'll take you through this three different market structures, and then we shall be able to identify all these three market structures. Okay, so the next one, let me switch from here. Let me take you to this is the book I sent you. That is the Candlestick Trading Bible. This was the book I sent you. All right. So I'm going to show you the uptrend market. Okay, uptrend market. When we say the market is in an uptrend, what does that mean? That is what I'm going to show you. So when we talk about the market being in an uptrend, we mean that the market is moving in an upward direction. The market is moving in an upward direction. So let me take you to the market and show you. This is GBP. This is what GBP JPY. Okay, I want to show you that how this market is how the structure of the market is. I want to start from here. Let me draw a line. let me draw a line. Okay, so starting from this point, okay, from this time frame up to where the current price is. This is the current price. Now starting from here, this market is in an uptrend. Why do we say the market is in an uptrend? It is in an uptrend because you can see that price started from here. Okay, price moved from here. Okay, so you could see that price moved from here and then it is trending all the way up. Look at the line that I have drawn. You could see that the market moved from down here and then it's trending up. It moved from down and then it's trending up. So you could see that this market is in an upward trend. Kindly take note of that. This is an uptrend market. On the daily time frame, the market is moving up. Now when the market is moving up, it basically means that the price is moving up. Price is moving up. So kindly take note of that, and then I'll show you how to trade an uptrend market. Okay, so let's go back to how to identify an uptrend market, or the characteristics of an uptrend market. So an uptrend market has two forms of characteristics. Okay, it gives you an idea about what price is doing. Okay, so just look at this market. You could see that the market moved from down here and then it went up to this point. Okay, and then when the market is moving in an uptrend, the upward movement of price is called an impulsive move. It's called an impulsive move. That is the upward movement of price. That is an impulsive move. And then when price move up to a certain level, price does not move in a linear order. It moves in a zigzag way. It goes up and down, up and down, up and down. Okay, so the upward movement is called the impulsive move. Then as it goes up, it reaches a swing high. It reaches a high and then it rests. Okay, so it retraces. So as it moves from here, it comes to this high and then it retraces. It comes down a little. Okay, the retracement is also called a pullback. So as it moves up, then there will be a pullback, which is a retracement. Then there will be another impulsive move upwards. Okay, there will be another impulsive move upward. Then the market will retrace. Then impulsive move, retracement, impulsive move, retracement, impulsive move, and retracement. Okay, so the market will be moving in that order. It does not move in a linear line. It moves in a zigzag way. So I'm going to show you how this market, or this upward trending market, moves. Okay, so let's look at something here. The market's price started from here. Okay, and then there was an impulsive move up. Look, this is the impulsive move up. Then the market retraced. Okay, it came down a little up to this point. So this is the retracement point. Then there was another impulsive move up. It moved up again up to this point. So this is another impulsive move. Okay, then there is a retracement down again. Then another impulsive move upwards. Price is going up. Okay, then you could see another retracement. Okay, from upward towards to the downwards. Okay, so market will be moving in that zigzag form. There's another impulsive move up. Then there is a little retracement down here. Then another impulsive move, retracement, impulsive move, retracement, impulsive move, retracement. In that order, the market will be moving in a zigzag manner. So market does not move in a linear form. It moves in a zigzag way. That is an upward move. Okay, which is the impulsive movement, and then a retracement, an upward move, and then a retracement. So kindly take note of that. And what that means is that when the market is moving in that way, okay, we have some levels we mark up on the chart. We have some level we mark up on the chart. I'll show you that. Okay, so that is for the what upward trend. That is for an upward trend market, or a market which is trending up. Okay, then let's look at a downtrend market. A downtrend, a market which is moving in a downtrend. Okay, so this is a typical example. Hello, can you all hear me? Let me know if you can hear me. Hello, if you can hear me, kindly type 222 in the chat. Let me know if you can hear me so we can move on. Let me know if you can hear me. Kindly type 222 in the chat if you can hear me. All right. Thank you so much, Gloria. So it means that you can hear me, okay? So this is another example of a downtrend market. Downtrend market also has this characteristics. You could see that there will be an impulsive move down. Okay, the market is trending down. So an impulsive move from the upward side to the downward side. Then there will be a retracement up a little. The market will pull back. Then there will be an impulsive move downwards. Then a little retracement up, an impulsive move, and then a retracement up, in that order. Okay, so going to the chart, let me see if I can identify a downtrend market. Okay, very good. Very good. Let me see. Let me change to an hour candlestick here. Okay, so within this time frame, okay, I'm going to start from here. Let me clear up. I'm starting from here, the top side. Okay, I'm starting from where I have placed the green line. Okay, where I've placed the green line, sorry, the blue line rather. Okay, so starting from the top, you could see that this market was trending down up to this point. The market was trending down up to this point. So starting from the top here, okay, there was an impulsive move downwards. Let me zoom in so you can see it well. There was an impulsive move downwards up to this point, then a little retracement up, then impulsive move downwards, a little retracement up, then impulsive move downwards, in that order. In that order, okay. So that is how a downtrend market works. That is the structure of a downtrend market. An impulsive move down, then retracement up, an impulsive move down, retracement up, impulsive move down, retracement up. So that is the characteristics of a downtrend market. Okay, the characteristics of a downtrend market. Now, how do you trade an uptrend market and then a downtrend market? We want to look at how to trade an upward or an uptrend market and then a downtrend market. Okay, so that is the next thing we are talking about. How do you trade this type of market? Okay, now when you open your chart and then you are able to identify the structure of the market, that the market is either moving in an upward trend or a downward trend or a ranging trend, a range market. Okay, what do you do? How do you trade such a market? So we have what we call the support and resistance. Okay, we use the support and resistance to trade this market. So what we do is that we have what we call this is an uptrend market. In an uptrend market, you realize that the market will be making a series of what? Higher highs and higher lows. When I say higher highs, this is what it means. The impulsive move of price from the downward up to the top, okay, is called a higher high. Is a higher high. Market has formed a higher high. Then the retracement back down. The retracement back down is a higher low. It's a higher low because this at this point price is lower than this part, okay, but it is a high because it is higher than this higher low here. Okay, so this is a higher high and then a higher low, then all the way up this is a higher high, this is higher than this low, then the market retraces to the down part or the downside, forming a higher low, then a higher high up, a higher low, a higher high, and then a higher low. Okay, so that is how the market moves in an uptrend. Now what you do is that if you want to trade an uptrend market, you only look for a buying opportunity. You only look for what? A buying opportunity. It means that price is going up, so you buy, and then when it gets to a higher price, then you sell. You buy low and then you sell high. You buy low and then you sell high. Okay, so what you do is that you have to place what we call the support and resistance lines. So you can see some lines drawn on this chart. It is called the support and resistance lines. Okay, so I want to show you, I want to quickly open the charts once again and then show you how to trade this type of market. Let me switch to the daily time frame. I'm switching to the daily time frame so we can my network is a bit slow. Okay, let me go back. I think my network is quite slow. Let me go back to okay, it has opened. Okay, so let me put this off. So what you do is that starting from the down or the lower part of the price movement, okay, the lowest low price form, what you do is that you draw a line, okay, which will serve as a support. You draw a line here, you place the line below the lowest point price came. So this is the line drawn. Okay, you draw a line there. Then the next thing to do is what? To look at the next level price reached from here. From here, price went all the way up to this point. Okay, it went all the way up to this point. That is the higher high. Then price retraces back to this point, which is a higher low. You place another line over there. Okay, so this is a support. Price moved from the support up to a higher high. Now the higher high becomes a resistance. Okay, it becomes a resistance. That is where price retraced. Price got to this level and then it's pulled back. So this forms a resistance for us. Okay, it forms a resistance. So you place a line over there, and then where it retraces down to, you also place another line there. Okay, so if you can see from this diagram here, you realize that you have to place a line at the lower lows and then the lower highs, the lower highs and then the lower low, the lower highs and then the lower low. You place lines over there. Okay, and these lines are called support and resistance. When price gets to the resistance, okay, it retraces. So look here, at the higher high here, this becomes, or this forms a resistance. So the moment price got to the resistance, it can no longer go up. So it has what? Retrace down. Now when it retraces down, it gathers another momentum to move up. Okay, so this is how to I think there is a message here. Let me read. However, okay, so he wants to go back to work. That is fine. You can watch the recorded video. Okay, so let me summarize it quickly. So you place a support at the lower lows, and then when the price goes up, you place another line that will serve as a resistance. So the lower high or lower low, you place another line there which serve as a support. Then as it goes up, where price got to and then it retraces, you put another line there which serve as a resistance. So that is the movement of the price in an uptrend. Okay, so price does not go up straight, just like I said. So this is how to trade an uptrend market. You wait till price would get to a higher high, and then when price retraces to the support level, then you buy. Okay, then you buy. So when you buy, you wait for price to move up to the resistance level, then you can what? Sell. You buy at the lower level or the higher low, then you sell at when the price gets to the higher high. Then you wait for the price to break through the resistance to form a higher high. Then as it retraces back to this resistance, which is now serving as a support, you buy from here, then you wait for the price to go up again. So that is how to trade an uptrend market. You buy at the lower or the higher low, then as it goes up, you sell. You wait for it to retrace, then you go into the market again. As it goes up and forms a higher high, then you sell. So that is a summary of how to trade an uptrend market. I think we are taking so much time on this. Let me wrap up with the downtrend. It's the same thing. When it comes to the downtrend, you realize that price will be forming a higher low and then a lower low. Okay, as it moves, the impulsive move down is a lower low. Then as it retraces up, it forms a lower high. As it goes down or as it comes down, it forms a lower low here. It forms a lower low here. Then as it retraces, it forms a lower high in that manner. Okay, so you wait for price to what? Break through, or as you put your support and resistance lines here, where price or the swing high, the highest price came, then the lowest it came is now forming a support. Okay, so as price break through the support, it retraces back to the previous support, which is now serving as a resistance. So as it hits the resistance, it comes down again, then it goes back to the resistance, then it comes down again. Okay, so for those who are just joining, we are looking at the structure of the markets. I'm currently talking about the downtrend market. Okay, so I think you can watch the video later for better explanation. So what you do is that in a downtrend market, you wait for price to break through the support to form a lower low, and then as it retraces back to the previous support, which is now serving as a resistance, you sell at this point. Then as it forms a lower low, you take profits. Okay, you get out of the market, and then you wait for it to retrace back to the previous support, which is now serving as a resistance. Then you sell at this point, and then you wait for it to form a lower low, and then you sell, or you get out of the market. Okay, so in an uptrend, I said you will only be looking for a buying opportunity. In an uptrend, you look for a buying opportunity, and then in a downtrend, you look for a selling opportunity. You sell in a downtrend. Okay, then the next one I want to talk about is the ranging market. Now, when we say ranging market, it means that the price is trapped within a range. The price is trapped within a range. So if you look carefully at this diagram, you realize that price moves from here, and then it goes up, it hits this line, and then it comes down, it bounces back to this support line. As it reaches the support, it goes up, it comes back to the support, then it goes up, then it hits the resistance, it comes down. So price will be moving in this range. Okay, so to be able to identify that the market is ranging, you should put you should be able to put resistance lines and support lines. Okay, you look at the lowest point that price came, you put a line there. Then you look at the highest point, you put a line there. Now these lines should be touching at least 2 points of the movement of price. So you could see that this one is touching here, it's touching here, and it's touching here, and that is a perfect resistance line. Then when it comes to the support line, you could see that it touches this part, it touches here, it touches here, and then this place is closed. So price will be moving in a range, as you can see. Now, how do you trade when price is moving in a range? Now, when price is moving in a range, you wait for price to hit the resistance, then you sell from here. Then as it comes back to the support, you get out of the market. Or you can also buy from here. As price gets to the support, you buy from here, and you wait for price to go up to the resistance, then you get out of the market. So you'll be trading it up and down, up and down. Okay, so as price is moving within a range, what it means is that buyers and sellers keep kicking the price up and down, price up and down, price up and down. That is what it means. Okay, so it means that the price will be trapped within a certain range. When it gets to that level, it will come down to the support, then it will go up to the resistance, come back to the support, go back to the resistance. So when price is moving in a range, you wait till it gets to the resistance, you sell, then you get out of the market. Or when it comes to the support, you buy. As it goes up, then you get out of the market. You make your profits. Okay, so that is a quick summary of the structure of the market. Okay, so I'm going back to the chart. I'm going back to the chart. Let me see if I can identify a ranging market for you to see. Let me see if I can identify a ranging market. All right. Can I identify a ranging market? Okay, so I think I'll find out and get you examples of a ranging market. Okay, so you should be able to identify what's the structure of the market. So from this level to this level, let me show you. From this level up, from here up to this level, the price was in an uptrend, or the market was in an uptrend. Okay, it moved from this downside up to this downside. Then from this point to this point, price was in a downtrend. As you can see, it moved from here down up to this low, then moved from this low up here. Okay, so this is a downtrend. From here to here it was a downtrend, then price moved from a downtrend in an uptrend. Okay, so when you open your chart, you should be able to identify a downtrend market and then an uptrend market. So from here, from this support level, you could see that price was moving in an uptrend up to this point. Price moved in an uptrend, okay, from here all the way up. So that is an uptrend. Let me see. And we can also say that, let me see, from here, from this point, okay, within this point, you could see that the market was moving within a range. It was moving between these two lines, this support and the resistance. So as it goes up, it was moving just within the range. This is an example of a range bound market. Okay, the price is bound within this range. Okay, so you wait for price to go up, then you sell. Let me draw it well for you to see. Okay, so this is a typical example of a range bound market. So price moved from the support level to the resistance. It came back, it hit the resistance again, then it goes up a little, then it comes down to the support. Now when it hits the support, then it goes back to the resistance, it comes back to the support. So you realize that the price is trapped within this range. Price is always trapped within the range. So this is an example of a range bound market. And then I'm saying that in a range bound market, you have to make sure that the support you draw or the line you draw below the price should touch at least 2 points at the lowest level. So you realize that the line is just below this price, and then it's just below here, and then below here. So this is a perfect example of a support line. A perfect example of a support line. Then the resistance also touches about 4 parts of the sorry, I think my screen just got disconnected. The screen got disconnected. Okay, so this is a range bound market. This is an uptrend market. Okay, the market was trending from here upward. Okay, then this is a downtrend market. The market was trending from up here down all the way here, and then the market changes direction from a downtrend toward an uptrend in this order. So at every point in time, you should be able to identify the structure of the market. Okay, so in summary of what we have learned today, we've learned that the market has 3 different structures. We have the uptrend market, we have the downtrend market, and then the ranging market. Okay, then we said with the uptrend market, you realize that the market will be making a series of higher highs and higher lows. So price move up with an impulsive move upwards, and then a retracement. Impulsive move up, then a retracement, impulsive move up, retracement, in that order. So when you realize that market is making that series of higher highs and higher lows, then it means that the market is in an uptrend. Then in the opposite direction, if the market starts making a lower lows and lower highs, lower low, lower high, lower lows and lower high, the LL is lower low, and then LH is the lower high, lower low, lower high. It means that the market is in a downtrend. Then if the markets move within a range, you could see that when you draw your support and resistance lines, you could see that as the market hits the resistance, it comes back to the support. It goes to the resistance, it comes back to the support. It goes to the resistance, you come back to the support, to the resistance and to the support. And then I also talked about the fact that if you want to trade an uptrend market, you wait for the market to go reach a higher high, and then it retraces back to the support. So as it hit the support, you know that it is going to go up. So you buy from the support and then you sell at the resistance, the higher high that it will be making. Then it moves down, lower high, you buy from here. As it goes up, you sell, you buy, you sell. So in an uptrend market, you look for a buying opportunity. Kindly take note of that. Then in a downtrend market, you look for a selling opportunity. So as the market reaches a lower high, you sell from here. As it comes down, you get out of the market. You wait for it to retrace back to the resistance. You sell from here. You get out of the market at the lower lows. Okay, so that is how to trade a downtrend market. Then the ranging market, as the price hits the support, you buy. As you come here, you take profit. Then you sell from the resistance level up to the support level. You take profit. You buy. As you get to the resistance, you sell, in that order. So that is a brief summary of today's lesson. We have been able to go through the structure of the market. If you don't understand anything, I'll give you the opportunity to ask your questions. I'll end here and then I would give you the opportunity to ask questions. So kindly bring your questions. I'm waiting for your questions. If you don't ask questions, I will ask you questions. All right, we have Better Wisdom, we have Eric, we have we have two Eric here, and then we have Fred. So I want to ask a question. Okay, let me mention names so that Eric Sechi, I want to ask you a question. Okay, so how many types of market structures do we have? Eric, kindly unmute your microphone and let me know how many types of market structures do we have? Hello, Eric, can you hear me? Okay, I think Eric is not hearing me. Is there anyone to answer this question? How many types of market structures do we have?
I know in some offices we have 3 types.
We have 3 types. Can you mention them?
We have the up trend, the down trend, and then the ranging trend.
Very good. So we have the uptrend, the downtrend, and then the ranging markets. Okay, so that is a very good one there. And then in an uptrend, what do you look out for? Do you look out for a buying opportunity or a selling opportunity?
We look for buying opportunities.
Very good. So in an uptrend, you are only looking out for a buying opportunity because the price is moving up. You wait till when it retraces to the support level, then you buy, and as it goes high, you sell. So that is it for an uptrend market. Then what about a downtrend market? Fred, if you can hear me, please answer this question. What do you do in a downtrend market? What do you do in a downtrend market? Fred, if you can hear me, kindly answer this question.
Come again with the question. I didn't get it wrong.
I'm saying that in a downtrend market, what do you look out for? Do you look out for a buying opportunity?
In the downtrend market, you look for selling opportunities.
Very good. You look for selling opportunities. So you wait for the market.
You look for selling opportunity.
Okay, good. Thank you so much. So you wait for the market to form a lower low, and as it reverses or it's pull back to the to the support, or sorry, to the previous support, which is now serving as a resistance. You sell from that end, and as price comes down to form a lower low, you get out of the market. Then you wait for it to form a lower high again, then you sell from there. So you'll be selling in that order. So thank you so much. You look for a selling opportunity in a downtrend market. Then the last one, in a rangy market, don't be bothered about the support and resistance. That is a separate topic to talk about. So we shall look at how to draw support and resistance, where price reach and then it retraces to come and touch the support, then it goes up. That is how price move in the market. It respects this support and resistance levels. Okay, so the next person, let me see who is next. Okay, Brother Wisdom, can you answer this question? What do you look out for in a rangy market? In a rangy market, what do you look out for?
We look for both the selling and then the buying.
That's a perfect answer. So in a rangy market, you can look out for a buying opportunity. When price gets to the support, you buy from here, and when it gets to the resistance, you can sell from here. You wait for it to come back to the support, you buy, sell, buy, sell. So in a rangy market, you can buy and sell at the same time when the price gets to the resistance and then the support levels. So that is a beautiful answer there, and I am glad that we have been able to catch up with this concept. Okay, so you being able to know that the market is in an uptrend, or the market is in a downtrend, or the market is in a range or ranging, that is a perfect skill you can get. So the moment you open your chart, okay, the moment you open your chart, you look out for the trend of the market. What is the market doing? What is the market doing? Now, the moment you see that the market is in an uptrend, it means that there are more buyers in the market. So you have to join the buyers. And when do you join the buyers? You join the buyers when price goes to forms a higher high and then retraces back to form a higher low. That is when you join the buyers. Then you move price up. So, and then when the market is in a downtrend, it means that there are more sellers in the market. So what do? You join the sellers by finding a key point when the market would form a lower high. Then you join them, you sell, and then you make your profit. So that is the concept we have grabbed this evening. So if you are able to identify an uptrend, a downtrend, or a ranging market, and then what to look out for in this market, it means that you have a skill. You have acquired a skill this evening. You have learned something great. Okay, trading forex is not magic. It's just little thing that joins or add up to be able for you to become a professional trader. Okay, so the last one I'm talking about, you could see that from here, when price moved from here up to this level, okay, it's retraced back down. Then it moved from here, it got to the same level, and then it retraced again. So you could see that this is a resistance level, the level at which price gets and then retraces. So what you do is that you put a line there which is serving as a resistance. So I put a line there. It means that as and when price gets to this level, it retraces back. When it gets to this level, it retraces back. So it means that there is a strong resistance level here. Okay, there's a strong resistance level here. So in our next meeting, we will be talking about support and resistance. Support, how to draw support and resistance. And that is going to be our topic for tomorrow. So kindly take notes. At this point, I'll give room for any contribution, just contribution from 2 people. If there is not any, then we'll call it a day. The meeting has been recorded, so whenever you want to watch it again, I'll post the link on the platform for you to visit it. Gradually, as we grasp this concept, I tell you that in no time you will become a profitable trader. Okay. So that is for tonight. If there is no question, then we would end the meeting. Okay, so see you all tomorrow, God willing, and have a good night. Enjoy your sleep. We'll meet, God willing, tomorrow. Bye.